The banks are creating piles of money. Let's have a look. Hello everyone, Florian Heise here, and I hope you're having a good day. I've got my afternoon stein of coffee, and I thought we'd read through this article. It's a little bit older, but was shared to me by a viewer, and I thought it would be interesting just to read through it, because it's very relevant. So the big four banks just creating piles of money, and this is from The Australian by Adam Creighton. So, as the final report of the Royal Commission, so this is from January 28 this year, as the final report of the Royal Commission into Financial Services nears, top bankers should at least be relieved. The real source of their power, the ability to create money out of thin air, was unaffected. And once you get your head around how our banking system actually works, it shocks a lot of people. So, the terms of the Royal Commission were set to avoid deeper questions about the structure and role of banks, an issue of extraordinary importance, which receives almost no public attention. Well, yes, the only groups that would be pushing for it would be the CEC, and the media is attacking them, at least the Financial Review was recently. So, yet somewhat mysteriously, one by one, central banks around the world have started revealing how money is created, destroying the free that banks are intermediaries lending deposits out to borrowers. The vast bulk of money in Australia and elsewhere has been created by banks, not the government or the Reserve Bank. Okay? The vast bulk of money in Australia and elsewhere has been created by banks, not the RBA and not the government. Unfortunately, the bulk of this new money has been used to purchase existing houses and apartments rather than on ventures that would improve the capacity of the economy, which has caused massive asset price inflation. Now, let's have a look at just this quote here, that I'll bring it up, from Matt Berry. Now, in 2016, 67% of Australia's GDP growth came from Sydney and Melbourne, and a small area of Sydney's CBD to Macquarie Park, which was having an apartment frenzy at the time, and we're starting to see the fallout of that, aren't we? Accounted for a quarter, or nearly a quarter, of the entire GDP growth for the year. And that's from his Medium article, Australia built on the economy is built on a house of cards. And I suggest you read it if you're not familiar with it. And, that shows you all of this money that's been created. It's just created an asset bubble, an apartment bubble. In 2014, the Bank of England, the UK's central bank, issued a remarkably frank article that set off a chain reaction. Whenever a bank makes a loan, it simultaneously creates a matching deposit in the borrower's bank account, thereby creating new money. Okay, so whenever a bank makes a loan, it simultaneously creates a matching deposit in the borrower's bank account, thereby creating new money out of nowhere, the bank said. One common misconception is that banks act simply as intermediaries, lending out the deposits that savers place with them. This was explosive stuff, puncturing the assumption maintained in almost all economic textbooks since World War II that banks passively lent out deposits and could be ignored in economic models. See, that's the thing. That's the thing. We have these economic models that are ignoring a huge part of it, the entire banking system, or how it creates money. It's just ludicrous. Last year, central banks in Switzerland and Australia joined in. In a landmark speech in September, Reserve Bank Assistant Governor Chris Kent moved to clear up a degree of confusion about how money is created, explaining that banks create deposits when they make loans. Okay? So when they make loans. Concerned citizens might be worried about what they see as the ability of private banks to create money via the extension of credit seemingly at will. I mean, we're all in the wrong game, guys. We're in the wrong game. Since June 2008, the volume of money in the Australian economy has almost doubled to 2.1 trillion, or about 115% of GDP. Mortgages make up the bulk of the growth. Banks provide such loans in deposit accounts to their customers, while simultaneously creating an asset on their own accounts, which is a record of what customers owe their banks. Now, this is important. Okay, the banks create the money out of nothing. Then they also get an asset, which is, we'll see, that's pegged against their reserve rates, because we don't have a fractional reserve banking here. We've got it's a different system with the asset ratios and asset classes. So if banks create currency faster than the rate at which goods are being produced, their action will cause a rise in prices, which will have a perhaps disastrous effect. So, do you think we may have seen that? Do you think we may have seen that in our housing sector? You know, we're just putting our thinking caps on here, a bit of theory crafting. I wonder. Maybe all that huge amount of population growth, or the significant amount of foreign investment here in Australia in 2016. Over 90% of properties. And you know what? I'm going to find that chart. One sec. Okay, I found that information, and I'll just overlay that here. And what we can see is Figure 1. This is from the Foreign Investment Real Estate Collapse. It's an article from the New Daily. Now, this is from the Foreign Investment Review Board, and it's approval of investments. You can see the red is investments in established housing. FIRB, approved investments in new housing, that's the blue. And the line with the dot on there is the approved investments in new housing as a share of ABS residential building approvals. So look here, about 2000, between 14, 15 and 16, 17. Look at that spike there, that spike right up. And it heads up to 90%. 90% up there, or over 90%. You can see that black line there. Okay, so that's pretty high, and that shows you all of this, even if it's foreign money coming into the country, then they're borrowing the money here in Australia. It's created in our economy. What's that going to do? What's that going to do? I strongly recommend you read this article, and I did a video on this a while ago, and I will link to that right here. And I'm going to write down the time. I'll try and find to it. If not, I'll link to it somewhere. But yes, so you can see how much that has dived. How much that has dived. So, globally, private sector debt has increased from the equivalent of 100% of GDP in 2008 to 125%, according to Oxford Economics. If the global debt surge leads to a recession, as many fears, we should blame the structure of the financial system more than anything else. Now the truth of money creation has come out, and people can start to understand how the system works. They want to have some influence over this process, says Richard Werner, a professor of economics at University of Southampton. Werner argues allowing large private businesses the power to create money without limit has fueled financial instability, inequality, and starved small businesses of funds. And you think it may also have decreased the value of the money that we have over time. Purchasing power has certainly decreased, particularly when you're looking at housing. That's the reason for 200 years of stellar growth in Germany, because decentralized banks made the decisions locally. And they mostly lent to small firms, he said, arguing that Germany's community bank-dominated financial system helps explain the extraordinary success of its business sector. I think, well, yeah, it would help to explain it. I think it's part of it. I think it's also to do with German work ethic, perhaps. If you don't have small banks, like in the UK, which is dominated by 5 giants, then smaller firms get little money, and you get a bad economy with a lot of inequalities. Where too big to fail banks prefer to lend for spectacular speculation, which is highly unproductive, he adds. Werner says, bank loans shouldn't be allowed to purchase houses or shares. This is not saying speculation is banned, but just saying you can't use bank credit to do it, he said. If it doesn't add to GDP, it shouldn't be allowed. That's an interesting position. Let me know in the comments what you think about that. Such changes, difficult to see without another financial crisis, would rip apart financial systems. Monetary regimes aren't forever, though. As the great economist Knuck Wixell observed in 1922, the choice of a monetary system, of currency and credit legalization, all are in the hands of society, and natural conditions are relatively unimportant. News that banks create money raises a lot of awkward questions. Should the extraordinary revenue that arise from this licensing activity be taxed differently? There's little effort or innovation involved in creating a loan and charging a margin on the difference between the assets and liability. By creating inflation, the creation of money has effects far beyond the bank and its customers. Are incentives properly aligned? Interesting. Why do most economic models still ignore the financial system? They certainly did when I studied a range of them in Oxford in the mid-2000s. Should there be a public option in banking to rein in the excesses of our privately owned but publicly guaranteed banking system? If the future fund is going to be allowed to compete with industry and retail superannuation funds, why not let Australia Post or the Reserve Bank offer basic banking services to the public? Last year, 24% of Swiss voted in a referendum to curtail private banks' abilities to create money. In its argument against the change, the Swiss National Bank hit out at alternative proposals to give ordinary Swiss the right to have a bank account at the central bank, a right, as in Australia, only available to private banks. Such a change would call into question the traditional tried and tested division of tasks between the central bank and the commercial banks, Governor Thomas Jordan said. He's right, but it is far from clear that divisions of tasks has led to a stable and fair financial system. So this is interesting, a very interesting piece. What is your take on this, guys? I think we've seen in our own housing sector the outcome of this. It's played out. Let me know what you think. Let's hear what your opinions are. What would your suggestions be? Take care, like, share and subscribe. Help spread the channel, I appreciate it, and I'll see you next time. Bye for now.